Taking profits on short positions as the market falls further. Gary, these are heavy days we've had on the ASX, falling through 7,000 points as we speak. And that's a heavy day we had last night in the US, also following a very big down day in Australia we had yesterday. So it's day after day. In this week's report, you've raised concerns over some of the ASX's blue chips and how to trade them and what to look for. But first, let's jump into the trading, the short positions, the portfolio you've been layering on week after week, more short positions. And recently you mentioned that you're looking for some marginal new lows. So are we at the new lows? Are we at selling point? What's the portfolio doing? It's a lot to cover.
Yeah, no, it is a lot to cover there. Look, I think the reality is I still reckon that the NASDAQ and the S&P got another 15% to go. So I think if I sort of look at sort of similar cycles, technicals, sort of how these cycles develop, sort of, the timing and sort of shape to come here, I still think there's another 15% lower to come here. But I know sort of in these bear markets, you do get sort of some, you'll get a few sharp bounces here along the way. So you do tend to get these sort of sharp bounces there. So I think we're sort of pretty close to that, probably down towards the bottom of that channel there. So you might get a bit of a relief rally here, but I think any rallies are only going to be short and sharp. I have actually trimmed a little bit of SNAS here, a small position yesterday, and another, a bit more today. So I'm basically probably, I've just trimmed 60% of my position here, just with this real weakness there. It's been a pretty aggressive sell-off in the NASDAQ and the NASDAQ futures there today. So yeah, just taking a little bit off the top here. I'm really looking for just a bit of a bounce here into the end of the week. And if I see a nice bounce in the end of the week, I'll probably go straight back on. But I just know this bear market, you see these bounces there, quite a bit. Feels like everyone's finally turning bearish too. I think everyone's been in a bit of denial for a while. And then now we're all getting shaky, all getting concerned. And so I feel like the market's finally, everyone's sort of now convinced the market's going to go a lot lower, whereas it's taken a long time to get to this point. This is usually, this is the point where people will start putting on shorts after it's already moved. We get probably
too late.
Caught with a little bit of a counter move here, and that'll scare them out. It's how markets move. That's how they work here. So, I still think that, we talked about all these confluence of, cycles, all these confluence of fundamental factors out there, which are pretty scary. I mean, that, to me, it was always that second, interest rate hike that, that was the death of the market. That was pretty much, the NASDAQ was rolling over in 2000 there, but that was pretty much, that kneecapped the market. So, we've seen exactly the same thing here. I mean, people talk about, the market's already priced it in. That's absolutely bullshit, Chris, as you and I know. Pardon the language.
Chart says so.
But some people go, no, it's funny, watching some of the commentary, it's like people who've never studied the market before, yet in their position of power and influence. But, it's like, just go back and study the data, people. Just go back and study history. History just keeps repeating itself over and over again. It's, where human beings are creature of habits, we just do the same things. Yeah. So, there's nothing. The weird thing here is the market's obviously pretty volatile, pretty scary. Everyone goes, I haven't seen a market like this. So, yes, you have. It's just been about 11 years since we've seen a bear market. Everyone's forgotten what it looks like. But if you go back and look at all the other bearish phases, this is no different to any other bearish phase. And the market is exactly the same. I mean, we're showing almost similar percentage moves, similar sort of moves up. It's almost identical to that 2002 period. And it's very, very similar to other bearish phases as well. And you're getting all the classic sort of signs that have come in previous bearish phases as well. So it's just replicating history, unfortunately. So, I mean, but a lot of us sort of forget, if it hasn't happened in the last few years, we tend to forget, our memories are a little short sometimes, but yeah, I'm digressing there, but I think, look, end of the day, I think we're going to head a bit lower there. I still think we're probably 12 to 15% lower, but I do expect a few little bounces along the way. I'm still aiming for around that end of June there, Chris, as a bit of a low. So that's kind of my target there, really.
Okay, so even though we've had heavy falls since you published this report early Monday morning, so that's Friday's data, the market has fallen, but there's still more to fall from where we are today. Is that what the numbers show?
I think 11,000 is a minimum on that NASDAQ, more likely to go back to 10 here. I mean, it's, I mean, I look, to be honest, it's sort of at the start of the year, I thought, looking at the monthlies and stuff there, oftentimes these blow-off moves, they can come back to where the last acceleration point started, which is around that sort of 7,500. So I always thought maybe that's always a possibility, but just the way that it's shaped so far, I don't, I think more likely just to come back to that old high is probably more reasonable. And that's probably equivalent to the first leg down, projecting it down as well. So that's probably more normal, but there's a lot of things happening in the world sort of starting to spook the market here. If this inflation doesn't start to sort of cool here and central banks have left it way too late here to react, the market can easily get spooked here. So, it'll be interesting to sort of see how deep this comes. But I still favour around 10,000. That's what I sort of favour on the NASDAQ there.
So big drops on the NASDAQ, which, as you're saying, still 10, 15% more to go. If we have a look at the S&P 500, you've had short positions on the SNAS as well. After we've had that drop, that takes it lower than what we can see on the chart on the screen at the moment. But does that put us around the sort of 3,400, 3,800 range? Is that the target for the S&P?
Yeah, so I think the measured moves around about sort of 3.8 or something like that would just be, equivalent to the first leg. But I do think this will be, bigger than the first leg. So still think that 3.4 is the way. I actually think what it'll probably do is end up punching through that level. Might go to say something like 3,360 or something like that. And then recover from there. But I'll be looking at the timing sort of when that happens. But yeah, I still think, we're sort of those old highs. I think that 2020 high, that's really the, for me, that's the magnet. I just sort of see that sort of matches up the cycles, matches up technically. Potentially that sits on top of the old high, so leaves it in a strong position to bounce as well, which is really what I want to see this year. The midterm years, as we talk about, the recoveries are pretty strong out of midterm years. So we want to come back deep and then bounce hard as well. So by the time it gets down there, everyone should be, in a state of shock. They won't know what's going on. Interesting today, sort of saw a few articles talking about, what was sort of streaming on Twitter was day traders basically have lost all their money. Everything made, supposedly people can measure how much money was made from the retail market on the way up here. As of today, they've lost it all. But I don't know about that. But when I see articles that are pretty bearish like that, pretty negative, it's usually and everyone's pretty turned universally bearish. Yeah, that's always a bit of a sign that we probably might see a little bit of a bounce as well. So, but yeah, I'd be careful about bounces here. I think they'll just be short and sharp and won't last too long. But yeah, I think ultimately those sort of the old high is really what we're looking for there. I think in the coming months here. So, I mean, we're going to get another 50 basis points higher here in the Fed. Let's say next month, and the following month again, we're going to get another 50 basis points. So, and then that still mightn't be done yet. So, yeah, it's going to be
more pain.
It's going to be interesting, yeah. So it's going to be interesting to sort of see what happens here. So, not sure the market will take that too well in its stride here if the example so far. But if you look at the history of the Fed, when they tend to sort of move rates sort of lower quite slowly, but when the tightening phase, you look at all the tightening phases in the past. I printed it off there. I don't know, maybe 10 years ago. I went through it just for to have a look. And the one thing that was surprising was actually how quickly once they turn, like it can go month to month. You can basically you can see the rate hikes for like 3 or 4 months in a row, quite large ones as well. So it's not like it's a bit like the market goes up slowly and then comes off quickly. The Fed's exactly the same way on the hiking cycle. It's very, they tend to hike them really hard and fast. So probably because they leave them late, don't get ahead of the curve, and then all of a sudden they're behind the curve, and then then they're having to be aggressive, and that spooks the market. And yeah, so but I see this as all an opportunity as well. So just be interesting to see how far this comes back here this year.
Well, that's, as you said, you've already sold into it a bit. You've sold some this morning. And if there's a rally later in the week, depending on how fast that rally is, you might use that as an opportunity to re-enter the short positions. Is that on the cards?
Oh, look, if we get a 5% bounce in the index, that's basically like a 10 or 12% relief in those ETFs because they're leveraged. So if I can get on 10 to 12% better price, I'll be straight back on, no doubt about it. So I think, I just think any bounces should be sort of sold here. So yeah, but I guess the good news is that Aussie market's always held up a lot better. Hasn't come back as deep. So I think, we'll probably come back half of what the US market. So I think maybe we come back another 6 or 7% from where we are today. So not nearly as much as the US market, but yeah, somewhere around 6,700. That makes sense to me. So we only got 400 points to go, I think, Chris. So we're almost
Far off it.
way there. So but yeah, I think we'll get down towards there, and that's probably going to be quite good buying as well. So seeing that 2002 period there, how our market expands to new highs, new lows. So new lows should be bought, is what history is sort of telling us there. And you're better to be in our market as well. It's been a lot more resilient as it already has been. So that's the target I'm looking for.
Okay, so targets on the Australian. Obviously, the Australian market, to maintain that resilience and relative performance to the US, we're going to need to see some sort of strength in our blue chips and our larger names. You've picked out some shares that you're concerned about at the moment, some blue chip shares. And we start off with ANZ with 0, 1, 2, 3, 4, 5. What does that mean on the chart?
Yeah, so like a basing pattern now. So like one of McLaren's patterns I used to sort of teach was the 0, 1, 2, 3. So that's the sort of classic sort of distribution sort of pattern there. So if you if you think about a base there, it's obviously like oftentimes as a market sort of has a counter move, it'll do like a little bit of an ABC. It'll be 3 waves, and then the trend will continue. But if it starts to sort of build a number of sort of higher lows, like if you think about a low, and then you're sort of getting one higher low, a second higher low, a third higher low, you're basically starting to see a nice base sort of starting to develop. But the opposite can occur in the distribution pattern as well. So you can basically get, once you sort of start getting, 2, 3, 4 sort of lower highs there, that's quite negative. So normally just a short, that's an impulsive move up into that high and then gone sideways, which in a normal market is actually that's usually quite a bullish sort of consolidation pattern. But then once you really need to sort of break out of that pattern and start to move up here, if you sort of get to that third lower high there, the 0, 1, 2, 3 pattern, that's when the thing's at risk here. The beauty of this pattern is, if you're from a short perspective, if you're wrong there, your stops at the last high, so that's pretty tight. And if you're right about the move here, it ends up being quite big. So this is looking like a bit of a scary distribution pattern here now, and we're starting to see heavy volume on the down weeks as well. So just starting to look that's starting to look quite bearish, that pattern there. So that suggests we could see a larger decline there. I'd say it's just pretty negative. So that looks pretty bearish. So that's probably tying in with the index weakness there.
Well, that's one of the best known banks, the Big Four. When you go outside the Big Four and you look at Macquarie, the vampire kangaroo that reported had phenomenal returns, and that was was widely held that the commodities trading was going to be to Macquarie's benefit. The announcement came out and the share price tanked. So
amazing.
How does that feed in?
Yeah. So this is classic sort of trading psychology here, is that, everyone was so bullish Macquarie, everyone thought it was going to be a cracking result. So sort of, again, buy the rumor, sell the fact here. So, all priced in. So, everyone who's long was already long. So, sometimes you got to sort of think who's left to buy this. So if everyone's so positive, everyone's saying, this is, everyone's already bought it. There's no one left to buy it. someone left. That's just sometimes you sort of just got to think about psychology of the market here and kind of where it's at in the stage. So it's actually no surprise to me to sort of see that come off there. I just look like a classic sort of lower high there. I thought the volumes were a bit lighter on that rally as well. So that was pretty scary. I mean, we saw a lot of that in the market. Index was rallying lots. That's a classic B wave. It's just like, low volume, nothing in it, and then bang. It was basically, we saw a little bit of distribution at the high. The week of the high where it had traded off was first decent volume. The next week, started to head lower, higher volume again, and then bang, last week we got, this week we got big volume again. So it's just, classic distribution. So that, if we're looking at an ABC, just the minimum move there, we're probably coming back to, 167, 168 there. But, this has gone up in a nice channel, broken up outside of that channel, which is sort of how these things sort of, sometimes they can, accelerate into these highs there when they break out. That's how they sort of finish the move. And then, now we've sort of got like an overbalance there. And so again, looks pretty bearish to me. It looks like 167 would be the minimum I'll be looking for on that. So we've got a few of the majors looking pretty bearish to me. And I think JBH is the next one there. We've got Chris as well. That looks really bearish as well. That's, we've got that big sort of diamond pattern there, which everyone's talking about. But then you've sort of gone up to a new height. Anyone who studies Wyckoff theory, go and look at the Wyckoff distribution. You've got sort of like two distribution sort of style charts there. This is sort of classic sort of distribution schematic number one, which is sort of like, you go sort of sideways in this consolidation and then you do a final thrust up marker, false break or a margin new high, and then you fail there. So that's like a classic sort of fourth wave, if an Elliott wave sort of style, which means you're going to, two things there. We've sort of got a false break. So it means we're going to come back and retest most recent low, go below that. And then this is like a classic sort of fourth wave. So once the fifth wave is in, you normally come back and retest that low as well. So both theories are sort of saying we need to come back below $42 here for this sort of for this particular pattern there. So again, our volume is pretty weak on the way up. We saw some distribution. We've just seen some heavier, even the two little bounces there, we got no volume, and then bang, we got the volume up again. So just seeing, distribution signs there. So it's pretty negative. So again, another heavyweight in the market. I know sort of everyone's talking about retail discretionary. Obviously, it's quite obvious there that if inflation's going up and we're all going to have less money, then less money to spend on, some of the discretionary spend. So it's kind of a bit of an obvious sort of sell, really. But technically, it looks pretty bearish as well. So this might come back a bit further than most people think. So, so just seeing a lot of bearish signs there. I just want to look through the charts there. Just all I saw was some really, really bearish setups across a lot of our bigger stocks. Interesting there. The only one I thought was interesting was the ING, Inghams. That's sort of come down to the bottom of the range. So big sort of price range there, sort of come back to has come back to a new low. So it'll be interesting to see how it handles this new low. I do know around 25% of its it's got a pretty high cost structure. So I think obviously the feed prices have gone up. I've had weather issues, had staffing issues, so there's a lot of issues going on there. But I do think ultimately it is, as much as they're getting having a negative time now, I do think it is a business that you can pass the cost on to the consumer. I mean, ultimately, if we all want more chicken, we're going to have to pay more for it, if we want it.
Especially if beef has already increased in price.
Yeah, that's exactly right. I mean, I don't know. I don't know if there's got any resemblance or not, but I buy pulled chicken for my bloody dog, and I haven't been able to buy it for about 3 weeks. There's just none there, and I have to go and buy like a whole chicken each week. But I'm definitely noticing some shortages in certain areas. So, but this is definitely one to watch here. I think it's pretty negative here. Looks like it wants to go a little bit lower to me, but I do think this is a business which can pass on those costs eventually there, as much as they're taking some heat now. So definitely sort of one to keep an eye on there. So it's one that I'm watching pretty closely, just because it's sort of gone to a new low, and I do think it does have the capacity to pass it on to the consumer. So ultimately, although that around 25% of the bottom line is on the cost basis, that has gone up quite a bit. But yeah, I think they can pass it on here ultimately. So yeah, just want to keep an eye on that. I just noticed that select harvest there come off pretty deep, and then it bounced pretty hard. So ING wouldn't surprise me if something similar happened with this one as well. Just maybe it gets down to 270 or 265 or something like that. But yeah, I'd be having a look at this one.
Right, well, that's one to keep an eye on. And as you say, those cost pressures could get passed through. Inflation's not a new concern for Australians now. So rising chicken costs is not completely off the table. Now, you published this report before market open on Monday morning. As we've noted, there have been 2 severe days on the ASX, so the price changes have varied a lot since you published these charts. If somebody wants to get in contact with you on how to trade and when your trade ideas are actually published and when you're sharing them with clients, are they right to call you on the contact details on screen?
Yeah, they can call me or they can email me, Chris. Yeah.
Very good. Well, thank you very much for the insights, Gary. I know it's a busy day for you taking profits on those short positions. So thank you for taking time out of that and sharing us your insights.
That's all right. Hopefully, I hope we get a little bounce here into the end of this week, Chris. That's kind of, from a timing perspective, I'll give a little secret away here. It's sort of one of the cycles I look at, one of the more bearish cycles. If it follows the classic cycle, we're looking for a rally here for 3 or 4 days, just up in the end of this week. So I'll go up into Friday or Monday, sort of what I'm hoping for. May not get it, but fingers crossed.
Well, we'll look into that over the next couple of days. Thank you, Gary Glover from Novus Capital.
Thanks, Chris.